Last week when Teladoc reported their earnings, the stock sold off, but I was more intrigued by what Cathie Wood did. I noticed over the past 2 weeks, Cathie Wood has been selling hundreds of thousands of shares in Teladoc as a sign of losing confidence in Teladoc. Now, when you look at the holdings that Cathie has in her ETF, you can see that on February 22nd, the amount of shares that she has sold off at a rapid pace. So it went from 11.54 million to now 10.17 million. So she sold off roughly a million shares in a week, which coincides with the stock price dropping from roughly $20 to its current price of about $15. But she still owns a big bag, so. But typically, when Cathie Wood sells, she's trying to catch that falling knife. In this case, or rather, she's buying the falling knife. But in this case, she's selling. Now, before we continue with the analysis, let's look at this article. Shares of Teladoc Health collapsed over 30% last week. The telehealth provider, posted weak revenue growth, more operating losses, and bad 2024 guidance. As a result, investors were sour on the stock after it was a pandemic darling. Now, the fourth quarter, Teladoc revenue was $661 million, well below analyst estimates of $671 million. Revenue grew by just 4% in the quarter, while the company continues to lose money. In all of 2023, Teladoc had an operating loss of $250 million despite putting in multiple quarters of cost cutting. Now let's talk about the guidance. Guidance was not there to save it either. In the first quarter of this year, Teladoc is guiding for $630 million to $645 million in revenue, which was significantly below analyst estimates of $673 million. The company has spent billions of dollars acquiring other telehealth platforms like Livongo, which I remember, and BetterHealth, but has yet to gain much traction among healthcare customers, except during the pandemic lockdowns when people were forced to search for digital solutions. Even worse for Teladoc shareholders may have been management's 3-year guidance. Management is only calling for mid-single-digit revenue growth and slight margin expansion over the next few years, meaning that operating losses are likely set to continue. Shareholders have been continually diluted, with shares outstanding up 366% over the last 10 years. This makes it incredibly difficult to generate per share value, meaning shareholder value has been diluted. All right, so now let's zoom out to the weekly chart, and it was a great setup when price broke down back in September, pulled back, only to meet with sellers, and then you have the steep decline from here. Now, there is a weekly buyer's level at $12, so I believe price is going to continue to move down, and I believe buyers are going to step in near that $12 level. Now, to see that level, we need to go over to where it was formed. And that was back in 2016 when it hit a bottom, had a W pattern, which it formed a double bottom. And when price broke that apex of the W, that's where the weekly zone was formed. As you can see, price tried to come back not once, but a second time, which tells you that there are buyers waiting for price. And so I'm looking for price to move down, but then to get a bounce. Question is Cathie Wood going to buy lower or continue to sell her shares? Only time will tell. Thanks for watching. Subscribe. Please like the video.